Can you answer the trickiest question about the 2021 stock market? It's so tricky that 3 out of 5 professional investors I asked didn't get it right. Here it is. Which stocks have done best in 2021 so far? A. Growth stocks such as Tesla TSLA, Shopify Shop, or the trade desk TTD. B. Defensive stocks such as Coca Cola KO or Proctor Gamble PG. C. Cyclical recovery stocks such as Boeing BA or Chevron CVX. D. Stocks with the lowest price tage. Work from home stocks like Zoom ZM or Slack. F. Top stocks from Reddit such as Tesla or Apple AAPL. The correct answer is D. So far, the stock market in 2021 comes down to this primitive formula: the cheaper the share price, the better it does. Thanks in part to day traders piling into micro-cap stocks after Uncle Sam doled out $600 checks. JPMorgan JPM strategists called it the repeat of 2020's spring boom. The answer is liquidity, which appears to be reverberating once again in an intense manner via retail investors, in a repeat to Q2 of last year, they said in a recent note. Now that Biden is dangling $1,400 checks for approximately 150 million Americans, investors are bracing for another wave of stimulus check trading. And as I'll show, these traders have more muscle to move the market than you might think. A lot of stimulus checks make their way into stocks. There's this theory. Bloomberg columnist Matt Levine calls it the boredom markets hypothesis. In short, it suggests people don't always invest specifically to make money. Some simply view the stock market as a fun casino and trade for pure entertainment. The theory is particularly relevant now. Hold-up people have hoarded a record pile of cash. Then along comes this windfall from Uncle Sam, with nowhere to spend it. So it makes sense that people choose to dish out some of that money gambling, ahem, trading stocks for fun. Just look up the surveys and data on trading activity after check distribution dates. People are indeed plowing a big chunk of their stimulus money into stocks. And from record new brokerage accounts, it seems a lot of them are just now dipping their toes in investing. The result is that stimulus checks are working backward. In theory, the checks are meant to encourage people to spend money on stuff. That should boost companies' earnings and eventually their stock prices. But it's the other way around. A lot of that money goes straight back into stocks, which artificially props up their prices without shoring up the underlying business. And the hotter the stock, the more its price becomes divorced from its intrinsic value. Now that Biden is stepping into the office with his $1.9 trillion American Rescue Plan, investors are buckling up for another wave of speculation.